What's up, guys? Ron from Rohde Law, and this video is going to talk about industrial submarkets within Dallas. I'm going to be really specific about areas that I know I drive, I live there, and as well as I invest, and many of my clients own industrial properties in these markets. If you're interested in investing in industrial in Dallas or Dallas-Fort Worth, watch this video as I go through a step-by-step analysis and provide objective or subjective opinions about these areas. Ron from Rohde Law, we're a commercial real estate law firm based in Dallas, and smash that like button if you're interested in learning more about industrial real estate. So let's just start at the top. Dallas and Fort Worth is a pair of cities that comprises DFW. It's called a metroplex, not too common otherwhere, but it is a pair of cities. Dallas is about 1 million people. Fort Worth is just under that. And it's really been popular because the DFW Metroplex, which extends quite far north, practically all the way to Oklahoma now, is about 7 million people. Okay, and this has been a real dynamic hotbed of job creation, population growth, industrial investment, transportation, logistics. Fortune 500 companies are moving here. All of this has created a perfect storm of factors for this population growth, as well as the corresponding commercial real estate boom. So, if you're interested in investing in Dallas and you get a property, right? The first thing that I do when I see a property, I look at the address and I go straight to Google. I want to know roughly on the map, where does it sit? Because I'll tell you in terms of the growth and where rental increases as well as high income people are moving, it's going to be to the north. And so on this map here, you want to look around Allen, McKinney, and honestly even north of here, because the growth that since this map, by the way, thank you to Cushman & Wakefield, they get full credit for creating this. It has really moved up here, and this is still Collin County, but it's heading towards Sherman. We have Melissa, Anna. All of these areas are fully developed and well on their way to becoming some of these northern suburbs that are now relatively expensive for North Texas, okay? So this map doesn't really include those areas along 75 North here, but this is a very large highway. I think it's 4 lanes all the way to McKinney now, and they're still extending the freeway up here towards Anna. So this is a good growth area up here. As you come down further, Allen and McKinney, in terms of products, they have a lot of newer flex buildings. They're going to be probably 80, sub 100,000 square feet. This is a newer part of town, so you're not going to get older buildings, nothing in the 60s, 70s, very few product that's older than, 80s or 90s. So overall, I'll say it's a good market. There's strong demand and high income households that can support a lot of the services businesses to lease out flex space. Richardson, Plano, this historically has been a tech corridor. We've had, Texas Instruments, you have Raytheon, you've got a lot of tech companies because its proximity to University of Texas at Dallas has produced that synergy. There's also a strong Asian American population, so for whatever stereotype, they get a lot of the engineers and they all work in Richardson, Plano. So therefore the industrial is pretty much low clear height, lots of flex industrial, flex retail, flex office type product. It's going to get a little bit older, but you've got larger buildings. They could be spread out over multiple sites, but this is also an older area. So progressively the buildings get older. Again, for both of these markets, I like it. I think it's in the path of progress. I think rents are only going to go up. If you buy infill location, you want to be close bound by, this is 75, this is Tollway. You want to be in these areas. You don't want to go too far east because then you're bordered by farmland, which could be a competitor. Let's keep coming down, right? We have North Dallas Metropolitan. I don't know what Metropolitan really means, but if you say North Dallas, people know what that means. And there's very limited industrial product here, so it's not a huge market that I'm really even going to talk about. If there's some small or older flex buildings, don't waste your time on those. Garland, let's head a little bit east. I really like this market. Garland is considered that blue collar working class. I see it all the time when multifamily gurus are trying to pitch me to invest, working class, class B, multifamily. That's Garland. I get it. That's great. I don't want to buy multifamily there, but I will buy industrial. So There's lots of buildings here with large clear heights. They've got dock high. You've got wide roads. Lots of trucking. There's ample opportunity in Garland. There's good freeway access. In between here, you have the tollway and 635. So I like Garland. If you see a property in Garland and it's big and it has some of those future-proofing features, then it gets a thumbs up from me. Walnut Hill and Stemmons, again, we're getting into very old parts, really, again, relative for the entire Dallas area or DFW. We're not going to be as old as some of the East Coast cities, right? This isn't Boston where you can buy a 100-year-old foundry or a mill that's converted to warehouse. But you can get 50s product here, you can get 60s product, and it's going to have like low clear height. It's going to have some outdated features. It's going to really not be as functional for some of today's users in terms of power delivery, parking requirements, truck court. And so you just got to take that into account when you're underwriting rental increases. Who is going to be your tenant? Let's talk about Brookhollow, Trinity. This is a really popular area. If you follow any DFW developers, Cantex, they love Brookhollow. And so they buy a lot of properties here, but it's very centrally located near workforce, near customers, as well as easy transportation. You've got a direct shot to DFW Airport here. And so Brookhollow is very strong. I think, if there was a cost-effective way to raise ceiling height, this area could just explode and double in value overnight with that. But with that caveat, the buildings are older, some of the lower clear heights, they may have foundation issues. And so there's just a lot of due diligence beyond just location that is going to limit what you should pay for property in Brookhollow, but again, also gets a thumbs up from me. Central Dallas here, trying to look at what their outlines are, and this particular area is interesting. It is at that intersection of industrial or older, smaller flex type buildings as well as residential development. And so you've got a ton of multifamily, you've got a ton of mixed use retail on the first floor. And so it kind of puts the landowners and the city at odds. I think that they're really trying to balance what do they want in terms of the zoning, variances, density. Do they want more residential? And if they're going to do that, they're going to limit the amount of use for industrial to try to squeeze that value down to land value and not income-based approach. So I would just be wary in Central Dallas. If you're down here closer to 175 or 45, that's a heavy industrial area. You're going to get, tire companies. You're going to get auto repair. And so there's a lot of those types of dirty uses. And you're not really in fear of residential redevelopment at those sites. But if you get closer to 75, closer to the business district, or Deep Ellum is an entertainment district, you're going to run into that impact when you're looking to place a tenant in your building. All right. Mesquite. So once you get outside of this loop and you're heading to east part of town, you don't get a lot of the development. There hasn't been the kind of residential growth. It hasn't been the household income increases. So as a result, it is still a fairly good market with new development opportunities. There's a lot of new buildings here. Mesquite and continuing this way along Seagoville and Forney, lots of industrial development. And so it's kind of developing itself a reputation as being an industrial corridor all along this area. And again, you get a lot of those benefits of being easy on transportation. You have access to workforce. So Mesquite, Seagoville, Forney along here, it's got a great reputation. And again, I guess I would give it a thumbs up. If you're looking for those bigger buildings, right, you're going to need 100, 200,000 square feet. East Dallas, I'm not even talking about it because they're so far out. Once you cross that lake, you're in Rockwall, Heath. You're not in Dallas. You're dead to me over there. So South Dallas, also stay away. I shouldn't say that. South Dallas has a lot of risks. You've got to buy right, and you've got to understand exactly what you're paying for and who your tenant is going to be, because South Dallas has not had the type of improvements, has not had investments in infrastructure, and it's really kind of a self-fulfilling prophecy. No investment, no job creation, no workforce, and then nobody wants to live there, and nobody invests, and nobody wants to take the risk. So South Dallas has really struggled. Again, I wouldn't buy there. I just don't think the upside is in South Dallas. Ellis County, we're out of Dallas, so I'm not even going to talk about Ellis County, but that's a whole separate animal. It gets a thumbs up, but you've got to know what you're doing down there because it is a completely different market than Dallas. Redbird is interesting. I wouldn't turn something down for this area. I think it has potential, but it's still proximate to South Dallas, so you've got to be really careful about who is going to lease there. Are you very close to a major freeway? Because that's going to be a selling point. Cheap land, low basis, and proximity to transportation. If you have those, it could be a good deal at the right price. Otherwise, kind of avoid anything south of I-30 here. Pinnacle Turnpike. Again, this is a very, very small submarket. I don't really even hear it referred that often, but also great locations. You've got a lot of industrial outdoor storage, which is me, but there's a lot of truck parking, there's a lot of 3PL, truck terminals, that sort of thing, truck service and repair, diesel service. DFW Airport, I really like DFW Airport. You've got typically newer buildings. These are beautiful flex buildings, tons of glass. They're really going for that tech manufacturer that has a very small footprint but high margins and can pay high rent because it's a cool looking building. But lots of development here in Irving, Euless, Las Colinas has some really trendy, but I think, you've got to be careful because the rents are starting to really push and your type of user, it may start to be priced out of this market. And so they need a user that values proximity to the airport, like real close proximity, like 15 minutes to the airport. I'll talk about Fort Worth in another video because I really want to dig into some more of these submarkets. This map doesn't really help just saying east, north, west, and central. I want to talk about some streets and talk about some developments that are going on. So subscribe if you want to learn about the Fort Worth market. Drop a comment to motivate me to do that video next. But thanks for watching, and I hope this was useful. If you have an industrial investment in DFW, figure out where it lies on this map, and if it fits your investment thesis, you can invest.